Welcome, everyone. We'll give everybody a chance to sign on. In the meantime, like always, we'll talk about the disclaimer. If you're going to manage your money, if you're going to do important things, always learn to read the fine print. As always, where past performance is not an indicator of future gains. We're not certified. We're not registered investment advisors. Everything we do is for entertainment purposes, is our opinions and our opinions only. Nothing in this broadcast is a offer to buy or sell any security, any instrument, anything at all. This is again for okay. Let's see if we get a few people signing on here before we start. Make some adjustments. All right. Okay, let's get started. First of all, welcome to the show. This is stockpickprofits.com market update. It is June 27th, 2018. A lot going on in the news cycle today. So let's talk about the news cycle a little bit. The markets today. Markets, a really unusual day, right? We had that big pop in the morning. We're up about 285 points. We ended up down about 76 points. Just really a fluxy day and stuff. It's you can see it. The Dow ended up about 76 points. We've got the wrong one up there. We're gonna have to pull that out. Anyways, so the Dow was up about 76 points. The Nasdaq was down about 76 points. The Nasdaq was down 116, about 1.5%. There's a big tech sell-off. Financials and tech were what led the market down today. You know, banks started off pretty good. In the morning, your Bank of Americas and stuff were moving up pretty good. And then about just before lunch, the bottom started to come out. And the VIX popped up another 12%. It closed just below 18. You know, it's getting towards that 2025 level, which is so important. This S&P 500 ended down about 23 points. It was green most of the day. That's almost a percentage move on that one too. So it was kind of a fluxy day. It was if you're a call buyer in the morning, you got really badly hurt. If you were a put buyer last night, you got hurt in the morning. Hey, there's a lot of talk on the message boards about, market makers coming to take stops and stuff like that. Don't bite into that, okay? You trade logically and you trade intelligently, and don't worry about these. You always see it on message boards, especially when guys start losing money and stuff. It's always the market maker's fault. It's always, I don't know, everybody, including God, right? So that was the markets today. You know, we started off with that nice little bang, and then we kind of petered out. Everything looks pretty good though right now. We're not looking too bad. Let's talk about the S&P 500 though. We want to talk about that chart because we've been talking about it for a couple of days, and it's been a real busy Wednesday. So I'm going to make the show quick today. I need to get back with the trade team, but if you look at that right side, it's looking more and more like a head and shoulders. You can see the left shoulder developed real clean, and then you got a nice head there, and then now you're working on that right shoulder. If it goes down, 2,700 was kind of like a inflection point in everybody's mind, and I believe we closed right under that. Yeah, 2699.63. So it's an interesting day, right? Which way do you go? Which way do you go? Well, right now you should be positioning. You should be getting ready for the next move. You should be well aware of which way the market's going to move, what you're expecting from it, and you should be positioning your plays right now. Stocks are cheap. Puts are a little expensive right now if you're looking to go short. We were looking at puts all day, just to kind of get a feel for what's going on with the other investors. And puts are trading maybe at about a 15% premium right now from normal. So if you're looking to go short, be very selective with your options and stuff like that. But be careful, that with that head and shoulders can really get ugly. It could mean a big sell down. Right now we're short the dollar, which just exploded today. So, but we're sitting tight. The options we bought are well placed, and they're out a few weeks, or actually a couple months and stuff. So we're expecting a move on that. So we're not panicking on that. But and we're also short Pandora, which had a nice breakdown today. We've been talking about that for a couple of days. Yesterday and the day before, we talked about Tesla. Not really a whole lot of news on Tesla today, so we're not going to really touch on that. But since we mentioned it in the last few days, we thought we'd bring it up. There's big news cycle today. Big news cycle. what happened was the SCOTUS, Supreme Court of the United States of America, it ruled against forced union dues. And this is kind of an interesting situation, right? Because unions, when they're run properly, are a very important part of the labor owner relationship. Unions, your collective bargaining. It's always better to bargain as a group than it is as a single individual, especially against a big multi-million-dollar company or an operation, right? So when they're run legally and they're done right, they're actually very, very good. The other side of that coin is, and everybody remembers the late 70s and stuff with the big racketeering charges in New York and stuff. I think the Teamsters were one of them. Unions, when they're not run properly, can be a very nefarious thing. So the big argument was, do we force people that don't want to pay dues to pay dues? Well, there's two sides to that coin. One, you might be in a union where the union leaders make hundreds of thousands of dollars. You get a pity ass wage, very little benefits. You know what I mean? Not a whole lot of defense and stuff like that from the union. Then do you want to put in dues? And you should have the right to say no. But the other side of that coin is, anytime that operation gets a raise, gets a benefit, gets anything due to that collective bargaining, you benefit. So in that case, you should be at least putting a couple drops in the pot, right? So that's a really, really interesting argument. But anyway, so the Supreme Court of the United States ruled that it is not going to happen. The other thing, there's other big news. Anthony Kennedy is retiring. This is kind of a shock story too. Even when the team told me, "Hey, did you see the news?" I was like, "What?" I thought, "Oh my God, something really went wrong." And it was they said, "Oh, Anthony Kennedy's retiring." I was like, "Geez." Now, Anthony Kennedy, of course, is a big liberal supporter. At Supreme Court, the big thing, with Garland and all them, stolen seats and this. Look, don't bite into that stolen seat BS, okay? That's been going on for a long time. Every administration always has to try to line that Supreme Court up. And the reason it's so important to these administrations is you don't get this opportunity very often. I mean, we've had a couple now in the last couple of years, right? We just had the new appointment who's making an impact already. And now we've got Anthony Kennedy, right? When you shape this, if the Trump administration is able to get a conservative judge in there, you have now got a majority, and that majority is probably going to last for decades, right? It's going to last until somebody retires or dies. So, here's another one, and I'm gonna kind of close the commentary with this one. I was kind of scouring the internet for news and looking at trying to figure out what was going on with that big turnaround in the market and stuff. It seemed to be just was a petering out of the buying. So we weren't really concerned about it and stuff. But I came across an article on the New York Times. Now, all you conservatives out there immediately, right? New York Times, all you liberals out there, of course, you're like, yeah, whatever they said is the truth. Well, you might not like what they said today. They had an opinion piece from a young lady who's a refugee. And this was back in 2014. And she wrote about the conditions of I guess you can call them internment camps at this time, right? I mean, it's these places where we keep the families and stuff, and they're not allowed to leave and all that. But she wrote a very, very honest and very open article in the New York Times. And it's surprising. Now, of course, the New York Times, we all know, like, if we're all honest, we know they have a liberal lean to them, and that's okay. Like I said, if you're a conservative, you should be reading everything. If you're a liberal, you should be reading everything. Don't box yourself in. Don't get into an echo chamber. But one of the biggest things she mentioned about this in 2014. Now, remember, this is 2014. I'm not going to name names of who is in charge because this is not about this. What it's about is she was held for 2 months in a family immigration detention center. I guess that's what they're calling them, family immigration detention centers in Artesia, New Mexico, run by a for-profit company. Isn't that frightening? She goes on to say about the day-to-day conditions are horrible and that the food was often expired, milk was spoiled, weren't provided with meal snacks for the kids and stuff. When they were taken away quickly because of rats and stuff like that. But that's what happens when a for-profit operation runs anything, right? When you're for-profit, you're looking to make money. Big mistake by the government. Why are you contracting this out. That's the first big argument. But now when the article goes on, it never mentioned President Obama. It only mentioned President Trump. It happened in 2014. But the point of this is not pro-Trump, anti-Trump, pro-Obama, anti-Obama. What this is we had a vote in one of the sides of Congress on an immigration bill. Of course, it didn't pass. The biggest reason it didn't pass was the Republicans that wouldn't latch onto it were afraid it was going to come back against them in the midterms. Let me tell you something. President Trump is not the problem. President Obama is not the problem. No president is the problem right now. The problem is your Congress. Okay, your Congress has had years and decades of inaction, and they just continue to let this slip through the cracks, and they just continue to use it like a political football. Why? Because they're only concerned about getting reelected. November, we have big name midterms. The control of Congress is up for the taking. So look. The point of this is, if you're voting for the same names you've been voting for the last 3, 4, 5, 6, 7, 8, like me, maybe 20, 30 elections, right? I'm going to be 60 next month. Oh my God. But if you're voting for the same people, you're part of the problem too. Let's get some new names in there, okay? Because these people are not looking out for anybody except themselves, all right? What happened in Queens last night with that girl that won that election over Conway, who's like a 10-term congressman or whatever he was. It's revolutionary, and it's a sign that Queens is tired of it. Queens is tired of Congress. Queens is tired of the same people telling us that things are going to be okay, that we're going to change, things are going to get better, we're going to make things better for everyone, right? Queens got tired of it, and they put somebody new in. I think she's 23 years old. Now, who cares whether she's progressive, liberal, conservative, or what? This is a great, great time for America. Queens has said they are tired of it. How about you? Okay, so now we're going to get off the soapbox and let's go see some questions. I'll post that link to that article, by the way, in the comments section. In fact, I can post it for you right now. And then let's get over to the comments and stuff. And I'm going to post this link right now. Let's get over to the comments and stuff and have some fun. Let me pop that in there for you right now. I see all your comments. Don't worry. So let's go right down the line. Roland, everybody, welcome. Great to see all of you. So I posted that link to that detention story. Go read it. It's really it's oh my goodness. It rips at you. It actually rips at you. Very few things for myself, because I've been doing this for so many years, would tweak me emotionally. And so, let's talk about, doesn't look like we have many questions, but hey, look, we love you guys too, man. And we'll keep doing this, and hopefully you get some benefits out of it. If nothing, it's a nice way to wind down the trading day, right? For us too. It was real important to the trading team for us to talk about that article. So, sometimes it's good therapy for us too. Yo, Roland, yo. Jesse's here. Ronnie's here. Svar is here. Did I butcher your name again? Samuel gave me a lecture yesterday on how to pronounce it correctly. I'm sure I'm still wrong. And of course, our girl's here, Tala, all the way from the beautiful North Shore in Hawaii. But, let's talk about something here. I want to show you guys something. Another Warren Buffett saying, huh? How's that? Risk comes from not knowing what you're doing. Very simple. Very simple. Isn't Warren Buffett great? Isn't he a fantastic guy? With his insight and all that. It's just amazing, right? Risk comes from not knowing what you're doing. And that's as simple as it is. And we always preach that in the group, right? All you guys that are members, we always preach that. Never go into things unsure. We never make moves unless we absolutely sure what we're doing. And that's what it comes down to that, keeping it simple, being disciplined. But risk comes from not knowing what you're doing. When you go and sign up for a service, why do you sign up for a service? Because you don't know what you're doing, and you assume they do. Now, some do, some don't, but that's a whole other story. But that's a beautiful, clean saying, and you guys should take that with you today and meditate on it. And let's do some comments and stuff on it later on down the line. We had I have an apology to make. Somebody asked about a stock yesterday, and I did not. It got so busy today in the trading room that I did not have time to research it. I just passed it to the trade team, so I should have done that yesterday. I will answer your stock question tomorrow, okay? I promise. I forget what the symbol is, but we'll check it out tomorrow. So look, guys, let's kind of review. Always lecturing. Samuel, there's days I would not get through if it wasn't for you. I love you, man. I love you. And hey, Sana from Sweden. But let's kind of review. The markets today, we had that big swing, right? We're going to leave that up. The risk comes from not knowing what you're doing. That's a beautiful, and somebody from the office actually put that in our assets folder. So I saw it this morning. I was doing some web work and I saw it, and it was just amazing. Whoever popped that in, maybe Laura or one of her team or something, whoever put that in from the team, thank you. That was beautiful. It's so simple and it's so to the point. So just remember that risk comes from not knowing what you're doing. Always know what you're doing, okay? And if you don't know what you're doing, go learn, right? Study a little bit. It helps. And so the markets today, it was the interesting market day. We popped up about 285 points. We came right back down. We closed down about 76 points. If you think about it, 285, another 300, that's a 500-point ride. If you're a day trader, you probably either lost a lot of money or made a lot of money today. The gap wasn't... Oh, you're too kind, Savar. I'm going to put that up after I talk about this. But the gap was a good trade this morning. We talked about that in the past. There's a lot of gap traders out there right now because we're getting these big closes and we're getting these big opens. So a lot of what gap trading is you buy Snap at $13 towards the close when they're kind of selling it. Like Snap had a little push down today, right at the end of the day. The last half hour is really hard on the market. But if you're a gap trader, what you do is you buy into that. And then tomorrow morning when the market opens, you know how the market opens. And we always tell you just sit through those first 15 minutes because that's going to really tell you the story for a lot of the day in most situations. That's a little tip for you guys. But, what you would have done on a gap trade is just bought that Snap cheap yesterday and sold it. I think Snap was as high as $13.50 today. So we got a play going on in Snap. We're still in it. We're at $13 on those calls. So if you guys are looking for plays, man, hot stocks right now, tradable stocks, Snap. Facebook's real tradable right now. Netflix has been tradable. Look, we talked about Netflix yesterday. If you had bought into the close on that sell down, Netflix opened up 12, 13 points. You would have made $12, $13 a share right off the bat. So hold on a second, Savar. I'll get right to that. Then the big news, SCOTUS rules against the unions. That was good for the conservatives. Anthony Kennedy is retiring. That is huge for the conservatives. Looks like Trump's going to get to put in another Supreme Court nominee. Sure, this will be one of the biggest battles we've seen, regardless of who's the nominee. And then that truth about immigration. You guys go read that article. Let's talk about it tomorrow. All of you, go read about it tomorrow. Post some comments. And then we're going to close with read the disclaimer. We talk about that while we sign on. And we're waiting for giving you guys a chance to sign on and stuff. I always talk about the disclaimer, so don't forget. All right. Always read the fine print. If you're going to trade your portfolio, if you're going to manage money, if you're going to do any business, learn to read the small print. It's a good habit. Okay. Samuel will tell you one of my worst habits is wait. I haven't read the whole disclaimer. You know what I mean? So, but it's important, and you always have to have somebody on the team that's like that. So, and it should be you. So let's go look. We got a couple questions. We'll do those real quick. I like the way Patrick pronounced my name, and it's always different. I know. Yeah. My apologies. But you do have Samuel on your side. So, Patrick, any thoughts on the short-term outlook for British Petroleum or oil in general? Look, we've been looking for an oil play. You're a member, so you know. I think we talked about it in the update this morning. We're actually looking for an oil play. We're watching gold. We're watching oil right now. Problem with oil is it ran so fast. Had we been in it, we would have made a ton of money. Maybe like an OIH or something like that. A lot of people like to play USO. BP, British Petroleum, will be fine. It's a great company. Look, this is a company that weathered oil spills, lawsuits, and stuff like that. It might be a good investment for the long term. I don't know if I'd get into oil right now. It just broke the $72 level today. A lot of people calling for $100 a barrel. I don't know if that's going to happen in this run, but what we want to see is a little consolidation before we get into a play. Look, that's a good tip for you traders. If you look at a play and it's running already or it's run away already, don't chase it, okay? Be smart about it. Again, risk comes from not knowing what you're doing. Study it for a couple of days, just like we are with oil. We're looking for an entry point. And the question right now with oil is, has it run too far, too fast? But the news that's been driving it has been legitimate, right? The Iran, nobody can buy from Iran anymore, so that takes their supply out of the market. And then the U.S. count came out today, and stockpiles were down huge, and that just blew up the oil market today. You know, is there, again, it's the old catalyst question. Do you have enough of a catalyst to push this to 75, to 80, to 90? Or is it going to peter out here? And is it better to go short and maybe catch the next move while it consolidates? And we're taking a look at it. But overall, I would say, if you're asking me how I feel about British petroleum and oil, I think it's a good time, especially for a longer term investor, that you want to buy some stock and hold on to it for a while. My favorites are always tech. There's a couple techs that I like for the long term, but oil is one of the things I would say to have in the portfolio, something from oil. And some tips are, you know, you want to go with strong stuff. You want to go with, remember we played, who did we play? We played COP about 2 months ago. We made a bunch of money on it. That was an oil play. But some of the easy ones, if you're looking for a specific stock, BP is a good one. Of course, Conoco and those are good. But make sure you look at them, because some of them are little laggards. Savar, if you're looking in it, okay, you're already in BP. I mean, if I owned it already, I don't know if I'd sell it. I mean, I just kind of keep an eye on it. Now, Savar, the other thing is too, and we're preparing videos on this for the group because we want to teach you about covered calls, but we want to do it intelligently so you guys get it. And we know you, Savar, you own some shop and you own some, I guess, BP now. Watch for this lesson. The team is finishing up making the videos, and we got to send it over to the office so they can watch it and reprove it. But we want to start teaching you guys about covered calls. There's a good way to use the covered calls to protect you. And we'll also share it. Oh, Jesse, Bitcoin question. Yeah. What have we heard about Bitcoin and digital currency? You know, we don't really watch the news on Bitcoin. I'm so sorry. But we do keep an eye on it. We got a big team. So, you know, there's a couple people that keep an eye on Bitcoin. We also have that small portfolio that we talked about, right? Yesterday, where we played a couple ICOs. We own some Bitcoin for the long term, just in case. Look, just because I sit here and say Bitcoin's never going to go back to 20,000 again, doesn't mean it's not, right? So we've got a little position in it. I mean, if it goes to 1 million, we want to have some. You know, that's a speculative play. So we don't even count it in our portfolio. It's a speculative play. It's a couple hundred or a couple thousand that you can afford to lose. It's Vegas money, right? Vacation money. So you go take a little position and then you just forget about it. Okay. And you wait for the cows to come home or the cows to leave town. Yeah, shop had a rough day today. I know, especially today, shop had a rough day. We were actually looking at it, trying to pick some positions in it too, because shop's an interesting story. You know, it's a good stock. It just recently IPO'd, right? It's not even 3-4 years old. You'll see that companies, once they, like Twitter's getting there now. You'll see companies in that first 2-3 years of IPOing. Generally, it's really a crapshoot, right? I mean, you've got these people that bought it fresh off the presses, and they're stuck in it for 90 days or a year, depending on what kind they bought on the IPO. And so you have all these unusual events, these anomalies, right? You have expiration dates for tied up shares and things like that. You have the start of option trading and things like that. So SHOP is still in that first what, maybe 3 years, I would say, period. And then once it hits about that 3 years, it gets very logical and very orderly. And that's the trick of an IPO. Twitter is starting to get there. Twitter is starting to find its true value. You never really know where a stock's true value is when it IPOs. I mean, you can look at the financials and you can tell what it'll make EPS wise and things like that. Does it have growth? Does it have growth in the core business? Blah, blah, blah. But you really never know how the traders are going to accept it. And really, it's a supply and demand market. So it can be a company that makes money hand over fist like Google, but it can be constantly going down because traders just don't want to buy it, right? And that's what happens in those first 2-3 years. So with a SHOP, if I had bought it and I'm still at a profit, I'd probably hold it for a while. I'd like to, on an IPO. And Twitter, like we said, Twitter is getting to that point right now where it's starting to get towards that, where it's got a little age and it's got a little tooth in it. So it'll start getting some orderly trading. Up until now, it's been a fantastic trading stock, right? We make money on Twitter, at least maybe once a month we'll make money on Twitter. Snap is the same way, and another fresh IPO. All these IPOs, they're very tradable in those first 3 years, and then they kind of get this orderly semblance. Funds don't buy to sell tomorrow. You know what I mean? If a fund buys a stock, it's generally going to hold that stock at least for a year because of tax consequences. So, and then back on the oil question, look, if you guys are looking for oil plays and you're not sure, maybe you don't have time to research or you're just not sure of yourself, that's fine. Go with an ETF. One of our favorites is OIH, which is a real nice oil ETF, and it's actually pretty orderly. OIH. And the other one, which is pretty popular, is OIH. And one of the other popular oil trading is USO. Okay, USO is another oil fund. So, and like I said, as a service, as traders, we're looking at oil right now, but we just don't want to pull the trigger. We don't want to buy into a top. That's our biggest fear on this one right now. It's been a big run, right? I think oil got another $2 a barrel today, man. That's huge. That's huge. This thing's just been on fire. And again, risk comes from not knowing what you're doing. And, I had a professor way back in college, and this is way back. And, he used to always say the funniest thing. He used to always say, hey, if you don't know what to do, don't do anything. If you don't know what to do, don't do anything. Let somebody else make the mistake. Let somebody else step in it. And it's kind of an interesting thing, but it's true, right? Look at oil. We're not sure what to do. Just step back. We got other plays on the board and stuff. And, you know what I mean? So you guys be smart. Risk comes from not knowing what you're doing. So, and that's beautiful. Whoever in the office put that in the photo, God bless you, man. It's great. But be leery out there in the market right now. Like we said on that, let me show it to you one more time. Because this is actually an important development. You watch that right side, you see those two last humps. The left looks like a shoulder and the right looks like a head. If we don't bounce off this area, we're probably going to go into a serious sell down, maybe down to wherever the last two support levels are. It's hard to tell on this chart, but if you're a member, you know what it is because we've told you. But it's kind of it's really shaky situation right now. It's a definitive moment for the market, and we're also rolling into summer. And remember, the selling may go away, blah, blah, blah. Summer, there's a lot of things that come into play. You start getting these seasonal plays, right? Like oil is generally a seasonal play. When it comes to summer, everybody starts using the air conditioning. Everybody go, you got Labor Day, you got the July 4th, you've got all these holidays. People drive their cars, people travel by plane and stuff. So generally oil does well in those months. Then it kind of has a lull. And then as you get into winter, your natural gas and to a certain extent oil will pick up a little bit more as people use heating and things like that. Again, that plays back to what we were talking about with this. Risk comes from not knowing what you're doing. Understand the market that you're trading. Like with the oil market, that's the best. That's the best advice I can give you is understand your market, and risk comes from not knowing what you're doing. You can have the best trading plan. You can have all this information. You can have sets of videos on your wall that are teach you how to trade options, understand options. But if you really don't know what you're doing, you're creating your own risk. Don't do that. And yes, Sana, you know, you heard, if you don't understand, don't do it. Go learn about it. There's times to learn and there's times to function, right? And you can't function unless you've learned. At least you can't function properly. I don't know. That make any sense? Anyways, gang, you know, we're gonna call it a day. It looks like you know, it's Wednesday, so it's hump day, and it was really a rocking day, right? We looked like we were off to the races in that first half of the day, and then the market, the bottom just came out of it. But again, too, and we were noticing this, you know, we've got a few friends that are bond traders, which is a very difficult market to trade. And so we kind of look at them in a certain pedestal. I've always looked at them kind of with a certain pedestal because I know how complicated trading the bond market is. And so when they say things, I tend to listen. And they're really, really right now, you know, they feel like this market is at an inflection point. But even they keep saying it too. It's like every time we get these big sell downs, it bounces at that same point. Now, at some point, it's going to fail or it's going to bounce hard. And that's what you got to predict, right? So that's what we're in the process of doing. But, you know, like with the service, we're in some picks right now. We're happy with the positioning we've got. We've got some green positions. We've got some red positions right now. But we're very confident we are in right. That's because we know what we're doing. Okay. And so we don't feel like when the market goes from up 285 points to down 76 points, no risk is added to our trades because we know what we're doing and we expect things and we plan to hit. So let's close the show with that. You guys all, thank you for your contributions, all your comments and questions. Please share the show if you like it. Please share the show if you think somebody can get some value out of it. All of you have a great Wednesday evening. We'll be back tomorrow right after the market as usual. You know, an interesting day today. Let's see how we shake out tomorrow. All right. Other than that, have a great day.